especially among my friends who are China chief economists out there, they can't publish it because they'd be banned from China. And I think it's going to be very difficult to find hard intelligence about China outside of private sources.
Yes, that video means China's economists cannot share economic data with the world. Now, I actually feel sick about this. Protests have been breaking out in China. That is because of local banks actually freezing funds on investors. As after years of us listening to the media talking about how China's real estate bubble was going to collapse, it is actually finally here. Now, before I explain how this will affect the US markets and the two possible outcomes, make sure you save this video, as you know this app is owned by you-know-who, and it will probably be taken down. Now, unless you've been sleeping under a rock, you would know that Evergrande defaulted on their debt last year. Being compared to the Lehman Brothers Bank of the '08 crash for the US stock market, this was supposed to end the real estate market for China. However, defaults on loans have been occurring for years. The first one in 2014, the second one in 2015, and pushing upwards of almost 100 since then. However, Evergrande is the biggest domino to fall, and now it's just a matter of time. How do we know this just isn't the boy who cried wolf for the 100th time? It's because this all started with local government financial vehicles. This was a funding mechanism that was created by local governments in China that usually existed in the form of an investment company. That company would sell those bonds to the bond market. This capital was used to finance all of the real estate development over the last decade in China, and made up over 39% of the outstanding corporate bonds from China's domestic bond market. And this is the most risky scheme we have seen since synthetic CDOs back in 2008. In fact, it is so bad, the US isn't even allowed to audit any of these companies because China is hiding a ton of debt. Let me simplify this so you understand what these vehicles were used for. The real estate market was booming. Every investor and foreign investor wanted to get their hands on China real estate. So much that China started allowing pre-sale investments, meaning they would sell these bonds, get capital from their investors, and then use that money to buy a property that didn't exist for years to come. The problem with this real estate development is that they kept doing this, and a lot of the projects never ended up actually getting completed. And now over 225 million in square feet, whether it's not completed or vacant, is just sitting there. Why? Because through COVID-19, all of these supply guts, all of these real estate companies have run out of capital and cannot continue to build, meaning no cash flow. And all these investors who have invested into high-risk bonds are now threatening to not pay their mortgage payments on a house that doesn't exist, which honestly sounds fair and is why everybody is protesting. But the problem with this is with no investors, especially domestic, wanting to invest into the real estate market. Means all these financial, corporate, construction, development companies are going to start defaulting on their loans. And the central bank isn't going to bail them out. Well, they just issued a plan for a $44 billion real estate fund. This was just trying to bring a little bit of retail confidence back into the space. President Xi is getting re-elected in October. With the failing economy and Nancy Pelosi just slapping him across the face while she visited Taiwan, he needed to bring back consumer confidence, as it has absolutely plummeted over the last 3 months, as well as their GDP growth and consumer and factory data. But here's where it gets worse. China only has about $3 trillion in US reserve currencies. But the debt from this real estate bubble is estimated to be over almost 50% of China's GDP growth right now. And the only number we have is from 2020, which is 45 trillion yuan, roughly $7 trillion. And that doesn't include their public debt. So it's fair to assume that there are well over $10 trillion in debt, which means no government bailout is coming, which means all your local banks are going to struggle and default on these loans, causing more protests as consumers cannot pull out their funds from their local banks, causing all of the real estate markets and development companies to go under, an economic recession. So these are the two ways I believe it plays out. One is very simple. The government actually just prints a ton of money. However, while China's inflation rates are down to like 2.7%, this would cause massive inflation. And that doesn't even factor in the impact that a recession would have on the supply chain. Due to globalization, China is the central hub for most manufacturing, which means to mitigate shutdowns, they would have to print even more money. Now, China being the second largest economy, it's hard to put a time frame on this. My guess is we could see something before the elections in October for President Xi, who will approach his third term. Or, and I want to be wrong on this one, if these dominoes were to continue to fall over the next few months or a year, the likelihood of an invasion to Taiwan could increase drastically. as it would be a massive excuse to all of the money printing they're going to have to do. It would help with their labor productivity if there were to be an economic collapse and unemployment go through the roof. If they really wanted to fuck the United States economy, this would cut out all of our semiconductors, which means they'd bring down the US economy with them in the short term as we go through major supply gluts because of semiconductors. Now, if you want to know how I'm going to play this, be sure to give me a like, comment, and follow. However, there is a million different data points that go into this and a lot more I would need to cover in probably 30 minutes to an hour of videos. So if you want to add something to this or have questions or concerns, be sure to give me a comment. And if I just somehow manage to have you watch a 5-minute video on TikTok, that means you definitely should check out the Discord link in my bio, where I host huge classrooms with one coming out tomorrow where I go in depth on all these conversations, going through all these tabs and data points and notes with you guys. And even call out some amazing trades. Thanks for the support. I'll see you in the next video.